Hey folks, welcome to Pro Trader Strategies market commentary for Wednesday, August the 4th. Actually, we switched it. We're spotting the trade. Hit that subscribe button if you guys want to get notified when we're going live. During the week, I'm going here about 11:30 Eastern time, 8:30 Pacific. So you can kind of judge that from there. And I do videos on Thursdays where we really drill down on a different option component each week so that we can really look at the internals of an underlying and build from a simple concept to real life examples with those type of things. Comment over on the side. If you guys want me to cover something, especially during earnings, throw it over there. I'll circle back around to make ssure that everybody is clear. But if you guys want me to touch on something during this video, please reach out to me over in the comment section at any given time, and we'll try and notice that over there. All right, and smash that like button for me. It really does help out. All right, let's get on with the economic data. Today, we got the PMI numbers from the European region. Now, remember, we get the flash estimates. That's a precursor to this. This is the final reading. They pretty much came in line with expectations. Spanish Services PMI Purchasing Managers Index. This is that forward-looking one, right? Remember, we talked about factory orders and stuff like that, where when we see the factory orders, that's a little late in the game. When the purchasing manager sees the factory orders, that's when he starts ramping up production. So that's why I like to look at the purchasing manager's index, or the PMI, over any other economic data point. But the final numbers coming in slightly lower for Spanish services and Italian services, but they're pretty close to in line with what we were expecting. German in line as well. So across the board, those final services PMI numbers looking pretty strong. Remember, anything above 50 is expansion. Anything below 50 is contraction in the economy. So here in the United States, we got our own PMI numbers, Purchasing Managers Index, for the service sector. Now we look for our ISM, which is the Institute for Supply Management, and they look at their flash estimates. We also get our flash estimates as well, but that came in line with expectations, the final number there. But we were going to look at this PMI number here for the ISM, 64.1, beating the number expected at 60.5. So by about 3.5% or 3.5 points higher than what was expected there. That's a really good thing. Now, ADP non-farm payroll change, that number coming in at 330,000 hires, folks. We were expecting almost 700,000 hires, and last month's number got pulled back by about 12,000. So, headline number, really not looking too good there. Giving a little bit more weakness to the overall equities based on that number. Another thing to note, crude oil inventories, a build of 3.6 million barrels. Well, it was expected to be a drawdown of 3.2 million barrels. So 6 million, almost 7 million barrels over what was expected. That's supply increasing due to the lack of demand there. We're going to see crude oil start to slide here, and I think we're going to be testing that 59 or the 60-59 trade kind of coming up pretty soon. Yes, we do have a value area, or a point of control, or a value area building up around this area of 61. Now we could pause there for a little bit, but I think lower 60s to high 50s is kind of where the market's going to go in at least the next 3 to 4 months here, heading into the end of the year, heading into summer, stuff like that. We might see a little bit more strength next summer for crude oil, but I just don't think we're going to see that kind of demand happening right now. All right, let's move on to gold futures. They're coming off a little bit here, still holding on to the 18 handle. Bitcoin making a move to the upside. Everybody talking about Bitcoin today. I don't really have a position in here, but I would have to say that the risk here would be a little bit further down to the downside until we cover that gap. I think that risk is more likely there. Now, bonds, they're coming off a little bit, but yesterday we had a nice move to the upside, a little bit of follow through today. I think that we're going to kind of hang out here for a little bit. I don't think we're going to see massive increases in interest rates anytime soon, at least until next year, 2022, heading into probably the summer. That's when we're going to start first seeing the FOMC start talking about inflation worries or raising interest rate to combat inflation there. And then we got the VIX. VIX is slightly higher on the day, and that's because what we were seeing earlier today is a little bit more weakness. Seeing some strength here as the day progresses, maybe people kind of digging into some of these earnings that were coming out pretty decent. As a matter of fact, we're going to talk about a couple of those here in a moment. But we've got the Dow Jones Industrial Average leading the charge to the downside. You can see down over 260 points, almost retracing all of yesterday's gains, which was a pretty nice day to the upside. E-mini S&Ps also near the lows of the day. You can see down 17 points on the day. And I forgot, my chart is messed up on here. I lost all my charts. So I scrambled through this morning, was trying to pull this back up. So if you guys ever want to break this down into like a daily chart, what you want to do is go into the volume profile, hit on the gear, you switch automatic to tick size, chart to day, and expansion is no. Is that? I think it's tick size. I think I'm right on that. Okay, so hit apply. It should all move to the singles, right? Now what you want to do is drop down and put that into like a 5-day, 15-minute, 10-day, 30 is what I usually do. And then you can see the volume profile show up on the intraday chart there. Inside day here, as you can see with the E-mini S&Ps. As a matter of fact, we could almost say it's been an inside day all week. Yeah, we've got a little bit of extension outside yesterday from that move, but for the most part, folks, this is a pretty close to an inside day. We're talking about this. I've talked about this in the past where we are looking at the charts. Did it again, folks. We're looking at the charts here on the breakdown. So to go back to this, because I'm sure some people missed out on that, we want to go to the volume profile section here, hit the gearbox, change this from automatic to tick size, change the chart to the day, and then switch expansion to no. It was on yes before, hit apply. Okay, that's how you drop it down to this, and hit your drop down if it's on a day session, and make that the 30-minute chart there. Okay, let's talk about some earnings trades here. We're looking at Caesars. Caesars making a bit of a move to the upside early today off of their earnings. Well, their earnings were expected to come out as losing basically 25 cents on the quarter there. Well, they came out and beat the street by about 75 cents, coming in at a positive $48. Now, something to note here. I've talked about the occupancy in Vegas and that they are at capacity. Well, something to note with that, they are only able to have 50% occupancy in the hotels. But during this pandemic, Caesars came out and talked about streamlining everything. This pandemic really opened their eyes to the fat in the system and where they needed to cut that back. So despite the fact that they are at 50% occupancy across the board here at Caesars, they streamlined that process. They've seen the best quarter ever. All right. They've seen margins increase by 40% across the board. So they are knocking it out of the park. Now, this Delta variant is kind of overhanging everybody in the travel and leisure. But the fact that Caesar comes out and says, hey, we actually did better during this overall time. Now, I think some of that has to do with the stimmy money, the stimulus. I think a lot of that money went to Vegas, unfortunately. But having said that, I think the casino stocks are going to do well from that. We can see Caesar's making a little bit of a bottom here yesterday. I wouldn't call this a confirmation, but something I'm going to be looking for as an upside move here. You guys already know I have Wynn long calls in here, and those are not working out. Something I wanted to talk about here, I don't know why I pulled this up on this move, but open interest in Hood on the August 16 that expire on the 16th. All right, the August that expires on the 20th in 16 days. Volume here, 30,000 on the 70 calls. Somebody coming in there and buying those. So that, a lot of times you see on TV the option activity, unusual option activity. I'm sure this is going to be showing up, but I'm a contrarian. I have a tendency to believe that when people are buying puts, that means that they're worried about downside. That gives us a pop to the upside. If you're buying calls, I don't necessarily think that is a bullish sign. I've done a couple of those recently in the past webinars where we've talked about some of these unusual option activities, and I've even jumped on board with those just to show you that that doesn't always work out, so we can keep track of those, and they haven't worked out. But I do expect the casinos for an upside move here, and I am long that Wynn. I'm going to ride that through the earnings because those calls that I have on for Wynn are just pretty much worthless at this point in time. I think I bought them for about, I can't really remember right offhand, but they're trading around 60 cents. So at this point, it's really not even worth taking my Wynn long calls off for this move here. But having said that, I did want to add American Express bullish trade here. We talked about these in the newest webinars that we've been doing on swing trades, and sometimes taking advantage of a bullish assumption when everything looks really good. That's the way this one's set up. So I got involved in this trade on the setup here, on the setup trade, where we came down, tested this 50-day simple moving average and my trend line there. Today, not necessarily a confirmation. If you're looking for playing this trade to get a confirmation, you need to make sure that the close of today is above 170. So you'd want to see it get to the highs of the day. As you can see, we printed that high. So somewhere up in that area would make it look like it is confirmed. I get involved in these a little bit early, generally, as per the trade here. I did get involved yesterday before a confirmation would happen. So, sorry, I'm struggling with my screen here. It is not wanting to play nice right now. And so I went into the January longer duration. We talked about this during the webinar on how to set up a synthetic long. Went into the January to try and take advantage of an opportunity where it would act just like the underlying, right? So I would generally hold an underlying a little bit longer duration. The beauty in a synthetic long, folks, is that you can counteract a lot of the negative aspects of options by doing this. If I buy a call and I sell that put at the same strike, the volatility, the vega will offset one another. The theta will offset one another, right? Because if I'm buying one, that theta hurts me. The thief in the night that comes and steals my premium is eroding those premiums on the calls, right? But the puts I sold those, and theta is eroding those. So it's helping out. So if it is happening at the same time, those will counteract one another, and we get rid of all of those negative aspects that some of those Greeks can cause us. So I went into the January, not because I'm limiting theta decay, but just because since there's no theta now, I can take advantage of a longer duration trade here. So the January, going in and buying 165 calls in there and then selling the 165 call or put, sorry. By doing that, when I'm selling puts, that creates positive deltas for me, right? Because if you look over in the Greeks, we can take a look at even something like Hood. This is the volume and open interest. But if we flip over to the theta, let's go on this. You can see that if I were to do a synthetic long or something like that with Hood, I'm buying the, let's go with the 59 delta right here. If I'm buying the 59 delta here, I'm buying 59 deltas. That means I'm long 59 deltas. If I sell negative 49 deltas, that's a negative plus a negative makes it a positive, right? So that makes it a positive deltas to my position. All right. So that's creating a situation where I would be long 100 deltas, or very close to that, 99 in this case. So with that said, try and build this out where you buy the calls, that's positive deltas, sell the puts, that's negative deltas, and add it all together. That's just like buying 100 of the underlying. Okay. Because think about it. If I bought 100 of the underlying, if it moves up by $1, I increase my position by $1. That's 100 deltas, folks. That's why people are talking about delta, delta, delta all the time. That would get you synthetically long the underlying, because if it goes up by $1, your position increases by $1. So that said, buying the calls, selling the puts at the same strike. I did that at the 165 strike, and I paid a debit of $3.25. Now remember, in that video when we were talking about synthetic longs, if you do a synthetic long for a debit that means you need to add that debit to the strike price. That's your break even. So if I buy the 165 calls, they're both the same strike, I add the debit to it. That means my break even is 168.25, folks. So if I am adding this in there, we can see it's trading slightly higher than that right now on AXP. Let me get to that chart. 69, so just slightly higher than that. It's in the money at this point. But we're trying to build this out for that synthetic long. I'm going to look at it to go up to test at least 180. I'll look to cover it around there. I think we're going to get a bullish move here in these, especially we're seeing the bonds start seeing some weakness. That means interest rates are going higher. That's good for especially some of these institutional style banks. All right. And that's about it. Covered AXP, Hood, coming out with that unusual option activity at the 70 call strike in those August that expire on the 20th. That's 6 days. And that's about it. I think I covered everything that I wanted to. Going to be riding out Wynn into the day. We've got Uber after the close. We've got MGM, who is getting bought by Vici, which is probably the largest REIT out there, and they are especially involved in the leisure aspect, or entertainment, I should say. They do own some casinos and a lot of resorts and things of that nature. And who else do we got after the close? Roku, I'm not going to probably play, but Wynn, MGM, Uber. Lyft came out with their earnings yesterday. You know, they were pretty bullish, despite the fact that they're having trouble getting drivers. I think Uber will probably say something very similar. And then tomorrow morning, we've got Kellogg. I'll probably take a look at that one. That's about it, folks. Remember to make sure you guys hit that subscribe button. There's a little bell to the side if you want to get a notification when we're coming on here. That will help you out. Comment over to the side. I'll circle back around for you folks. Make sure everybody's clear of concept. And finally, please smash that like button because it really does help us out. And if you can't take that, take it easy. Bye for now.